I want to thank you for joining the conversation. This is an ongoing series of conference calls, a collaboration between Ron Arnold's When Home Isn't First and Greenpath Funding's Brian Fraser. Today we'll be discussing FHA home loans. Let's jump into the conversation.
The second loan type that is very, very common would be an FHA loan. FHA loans are typically what people consider first-time homebuyer loans. Some of the down payment assistance programs, such as the California Housing Finance Agency, has a down payment assistance called the CHDAP. It's a 3% second that can go in combination with FHA so that the borrower only has to come in with 0.5%. That's where this loan would work. So the minimum investment is 3.5. You can get a down payment assistance program to bridge that 3% gap that we just talked about, if that makes sense.
So is that the advantage of this loan? One of the advantages?
One of the advantages of this loan is that down payment being lower.
Okay.
Once again, that down payment can all come from a gift. But the biggest advantage of this is the story that we can create behind it. The reason I like to call this my story loan is because it's not as credit sensitive. We talked about with conventional that the credit really plays a big factor. In this case, it doesn't play as big of a factor. Frankly, somebody who has a 650 credit score isn't going to have that much worse of a rate than somebody who has a 750 credit score. Where conventional, there's going to be a huge difference there. This loan is based on the ability to repay, and they take into effect the entire scenario. So we're going to ask for letters of explanation. Why did you have derogatory credit? What led up to it? Those types of things to create the story about how you're going to be able to repay this mortgage in the future. That's where the story part comes from. In addition, it will allow for what we call the highest debt ratios. What that basically means is the percentage of the house payment plus regular monthly bills such as car payments and credit cards to your total income. Conventional is going to be a little bit less than where FHA is. So that's a big part that sometimes we go because, people are trying to squeeze in maybe a little bit, or we need that extra little because there's a bill that might be dropping off in the next few months, that type of a thing. So it's a lot more flexible from that standpoint. One of the big things with this program is the waiting periods for derogatory credit are significantly shorter. So with derogatory credit, if we can prove that there was an economic event that caused a 20% reduction in income, I can do a new FHA mortgage as short as 1 year after a short sale, a foreclosure, or a bankruptcy. That is a huge thing. Most people aren't aware of. It's what's called the Back to Work program with FHA.